Tell me about how you approach earnings season and how you approach a trade. Like what prompts you to make an earnings season related trade in that service?
So with earnings season, I'm not going out and just, playing a bunch of earnings trades. I
Right.
typically make 6 to 8 earnings trades per earnings season.
Yeah, 34 total trades since, in 16 months. So that tells you right there. Yeah.
So what I'm really looking at is there's something called the expected move. So we go in to an earnings event and volatility always. This is the one of the few guarantees in the market. Volatility is going to pick up prior to an earnings announcement because there's so much uncertainty. And so you have people, whether they're buying protection or they're speculating, there's just that demand, that pent up demand for those particular stocks that are having those earnings events. And we also know that after that earnings event is over, that the volatility is going to get crushed. I mean, these are things that we know for certain will happen. So then it's a matter of how do we take advantage of that? So we look at the expected move going in, and with volatility higher, that expected move is going to move further out, which means that typically if you have a stock that's trading for 50 and the typical expected move might be $10, well, going in front of the earnings event, it might be $15. So if we know what that expected move is, and we understand that 80% of all earnings announcements fall within that expected move, well, the first thing that we want to do is go outside that expected move by using a strategy known as an iron condor. It's a range bound strategy. The other thing that I look at, though, is I want to look at past earnings events and how those reactions look after that those earnings have been announced. If we see certain stocks, they might be fairly mundane and have low volatility, they're low beta stocks, but around earnings they go crazy. So I tend to avoid those types of events. But if we see that those earnings moves historically, and we can go back to, oftentimes I'll go back all the way to 2006, 2005. And if we see that those earnings events historically have fallen within that current expected move, we're going to make that trade.